Hello, and welcome back to the second episode of the LAGFX live stream. So, we're back here. It is currently 3:43 p.m. And we're pretty much just going to have a good 45 minutes of trading. Just at the end of the London-New York overlap. We had a bit of spare time in the schedule, so why not do a live stream? So, I'm literally just going to be watching the Euro USD for starters. I'm going to run through some of what I'm seeing because it has been quite a nice market at the moment. This sort of range that we'll go through, what we're looking for, what my overall bias is and whatnot. We'll take you through that. You can see what it is and how we would actually go about tackling this market. So let's jump straight into it. No, I did not want to move that rectangle. So, inside of this region, obviously we had some sort of fundamental. I believe it was something to do with the FOMC. They released statements or something along those lines, which led to a large push up. Now, prior to this, we did appear that we were starting to go bullish anyway. We displaced this high. So the expectation now, with this information we have of the fact that we appear to be going bullish, is the price will eventually trade us down into here and potentially find an accumulation to take price higher. So we're going to be looking for longer term sales, but we will be trading the market in intermediary ways dependent on what it delivers us. So looking inside of this range, if we first go down to a 1 minute, and what we can see here is that price didn't, where it traded up here, didn't tap into anything that we were watching. However, what did happen in this region is the fact that we did have what should have been a protected low. So this region here was displaced, and after this displacement we came and perfectly tapped into the last buy to sell. There was an entry opportunity here. If we just replay back to sort of this region, go to the 5 second, we can just sort of see that as price trades up with this bullish structure, we see that this low here isn't protected. This comes to just about break it, and after we saw that break, we probably would have taken. This is a very large last buy to sell, so probably about 50% of this candle, and I would have had a pending order here waiting to take us lower, which would look a little something like this. And I do actually have raw spreads on Euro US, so my stop would literally just be there, 1.8 pips. And we'd look to partial at this point, so at 6 pips. And then we'd look to potentially hold that final target all the way down to this region, because this is that last sell to buy. So that is where we'd hold it to. Yes, it's only a 15 pip take profit, but the stop loss is 1.8, so that's still an 8.3 returns. This is why calculating lot size is crucial, because in order for those 15 pips to equal a profitable trade, we obviously need that to equal at least 8.3%. So that right there is how we would have looked to tackle that trade. Let me actually just change that to a supply zone. Now, price is going to continue playing out. Obviously, I already know what happened because price has already done this, but it perfectly comes down into that point of interest, so we would have had a take profit hit on that region. Kyoto, welcome back to the stream. How are we getting on today? Yeah, we would have got a take profit hit from that region, where we then tap into demand, and then from this region, let's just continue letting price play out. We've not yet had a displacement. Let me pause it. It appears price has displaced, so assuming that we now come down to mitigate a region, so if price taps into our last sell to buy and we see some rejection, this could potentially be a buying opportunity. So if we take that as a point of interest demand, I just play it out, see if we get some rejection as we tap in, or if we tap in, should I say. Yeah, we've tapped in. We did get some rejection, so maybe we got caught out initially. However, price falls through. Straight after falling through, we get a fractal displacement. So again, we could say, right, this is our full mitigation we needed. Yes, this was invalidated. So let's get this tool. Zone invalidation. Let's do the same thing again, just see if it plays out. Last sell to buy. Let's see if price potentially taps into this to give us an entry. Yep, we get a tap. And now let's see if price takes off. No, we've invalidated the zone again. Which is going to happen, we're getting manipulation. What's happening here is we have higher time frame accumulation. And this is why it's so crucial, because we have 8.3 RR return. We can be wrong, like we have been here twice. We've been delivered what we needed. We had a fractal displacement, which some people may not find full confirmation. They may have actually waited for this one to be broken rather than the more fractal one. If that's the case, they probably wouldn't have been involved in this in the first place. However, going back to what we're saying, now here we've had a manipulation of that liquidity. Let's see how price plays, or if it holds this zone. Okay, we're trading higher, trading higher. We've broken structure, we've displaced, so we could now look for buy positions from one of two regions. These are the two regions I personally would look at. Let's see if it plays out. It may do, it may not. Okay, yep, so we've had a tap there. Given that we got involved, or we saw the rejection here, assuming stop loss again, just beneath, partialing here, so partialing at 4 RR, and then potentially having this take profit, because we know that price has left over a last buy to sell here. This is probably where I would keep that take profit. Point of interest. Let's see if that taps or if it invalidates the trade. Okay, so we've had a sharp shot up. Price is slowly trading further up, further up. There we go. We've had the tap. We've had take profit hit at a 13 to 1. Obviously, we would have taken the partial here, so it wouldn't have come back as 13 RR. But yes, we did take 2 losses here. But the 2 wins that we would have had on top of that make up for it because of how high the RR returns on these. So we can afford to be wrong, which is why trading such a lower time frame like this is very aggressive. But once you get used to it, you'll sort of familiarize yourself with what happens. Now I already have these zones drawn out, so we already know what happens, but let's just see exactly how it does and I'll explain why I have identified the zones that I have. So after we had the tap in here, we could have looked to be a seller. Arguably what's happened here, we've had low set, we've traded up, we've displaced the low. Now as we trade lower, I would have originally been looking to mark this up as a supply zone, but we've already traded away from that, set a new protected high. So the next point I'm looking at is that region there. See how price plays. Okay, we trade all the way down. We come to actually break this structure, so that is a good sign of bearishness in the longer term, because we've broken what should have been a protected low in that buy. However, we know already from the higher time frame scheme of things that we did want to go bearish. So just looking into this, price does come back up to tap. Now on top of this, as price played, I probably would have also identified a region in here, just because this could have potentially reacted as a high in the market or a protected high. We didn't break the low, so it wasn't a confirmed protected high. However, we could have been slightly aggressive on that. Maybe we would have seen price tap into this zone, have some rejection. Maybe we got in on a sell, maybe we lost a sell. I'm just giving you all the scenarios that could happen. Now let's look into here. Okay, so I like the way we've built liquidity. We've then tapped and given a full mitigation. We've now had a displacement. After we have that displacement, we'd be looking at this as an impulsive wave, and I'd be looking at either a region up here or this candle there. Let's see if it reacts to either. Yeah, so it came back up, reacted to this candle. We continue going lower. We then take this as a supply zone, because after we've had this big push up, and this is a very large retracement, so when we have these large retracements, which is coming to mitigate something after entering a point of interest, so this is part of a distribution. We know there's institutional control there, so we're taking that as a supply zone moving forward. Price continues to play. Again, we could have looked to go short there. It seems like there's too much volatility at the moment to try and get any more entries, but we'll look if one comes. Maybe taking a sell from somewhere in this region, given how aggressive price is. I can't imagine it giving us a large retracement. But it depends whether the low gets broken first. Yep, low gets broken, so we're already invalidating that point of interest. A good entry we could have gotten actually. As we make this structure and we break the low in the market, this then becomes the protected high. We have a nice candle left over here, a nice buy to sell, which we could have been looking at in the moment and taken sells from again. So there's another potential opportunity we're looking at. We have now exceeded the low in the market, so we've put in a lower low. Now we're not looking for any more sells because we've already exceeded the low that we're expecting, so price could reverse at any moment, as it has done. And then we come back up, looking at this zone to take sells from. We see we're making some liquidity beneath. We get a tap. Let's see if it holds. It holds. Do we get a displacement? Yes, we get the displacement. And now it seems as if an entry here was probably wasn't gained, just because of how aggressive it has been after the reversal. But even though we failed to get an entry on this impulse down, as I stated, like we had in the last time, we've had distribution, and then this entire push up with how large the retracement is, it's a nice sign of institutional control. So we'll be taking that as a supply zone. Nowhere else in that wave, to me, acts as a supply zone. So this would be the only valid region. So you've created a little bit of liquidity beneath. That's quite nice to see. Even more liquidity created beneath. Let's see if we get a tap from here. Okay, price has shown its desire to actually make a move higher because it has broken what should have been a protected high. We're running some of the liquidity highs after doing so. Let's see what happens. Yep, we now protect this low. We start to trade back up. Now the reason I am liking this is just because we have so much liquidity beneath this point of interest now. The more liquidity we create, the more likely it's going to be that price is going to blow through this in order to reach this point of interest. It seems like it's now starting to get enough demand to potentially make that move, but we're being patient. We're just waiting for an alert to ping or a pending order to tap in this region. More liquidity getting built beneath. Perfect, there we go. Now, after we've had this entire region of liquidity built, so all of these highs, every single one in this region is acting as liquidity, and then we've had a very nice high volume push through to mitigate that position, and you can see it's literally an instant tap, and we have a gap in the market because price has tried to shoot down so quickly. From this point, if we didn't already have a pending order set, let's just turn down the speed and see if there's any potential opportunities. So any mitigations, I'm looking at this candle off the top of my head for any potential taps. Maybe it does, maybe it doesn't. Maybe price goes lower from here. Yeah, we've broken that low, so we have potentially invalidated this zone now. However, I'm not seeing any clear zones inside of this, so it appears that an entry may not have been easy to find. Let's just wait to see how price plays out. Speed that up. Okay, no, we don't get a tap. I thought that price may have come back up to actually tap into that region. However, it didn't. It all depends how you trade. You may have seen this as a double top and looked to enter there. However, let's just get price back to where we are as of recent, because we are approaching recent price. Yep, we'll end that. Okay, so how are we looking to tackle the market moving forward? We are now trading down to an overall demand zone that we're talking about. So if we zoom out, to follow the bullish structure that we're in higher time frame, I'm expecting price to trade into this zone, hopefully find an accumulation to take us higher. So it's likely that I'll no longer look for sales because of how close we are to the zone. I would now just be waiting, just be patient, waiting for this alert to ping me. However, let's go inside and look for any opportunities that we could have found. Now, one that's sticking out to me is this wick tapping into a last buy, which looks very nice. The last buy candle before a heavy sell-off with inefficiency. We create liquidity, we have a high volume push through, tap in, and then a high volume push straight back down. So that is a very nice entry we could have gained there. It doesn't seem as if price fully taps into there, so we wouldn't have gained an entry on that. Broken low, potentially we now see price either react to this candle or come up to react to this top one. We'll see what happens. Let's actually go to a 5-second to watch this. I think the price could react to this buy candle. We've had a wick in, we've had some rejection from it. And it seems as if price is being rejected. The other thing that makes this quite nice is that we've cleared some liquidity as well. We've sort of had some hesitation and some inducement in the market before we've introduced that momentum, mitigated the position, and instantly reacted with high volume. Apologies about that, everybody. The dog was trying to get in the room, so we had to send him down. Just profited from EURUSD, thank you. It's perfect. Exactly what we like to see. I think within the next couple minutes, we're probably going to get a tap into this region. Just a disclaimer to everybody, I'd be very careful taking such fractal trades unless you are on an account that gives you raw enough spreads to do so. Thankfully on Euro US, my spreads are raw. It's either 0.0 or 0.1. So I can get away with getting involved in trades like this. But if you have spreads of over a half a pip or a full pip, then these trades aren't going to be for you, and you should be looking at the higher time frames, but you'd be doing the exact same process on the higher time frames. You've got raw spreads on your USD as well. Yeah, that's perfect. Then you can look to take more of a scalping role on the market in that sense. Now, what I am going to be doing, because this is a larger zone and a zone that we have identified on the higher time frames, I'm going to be finding my entry confirmation on the higher time frames as well. Because we've got such a large region, we're going to have a lot of areas on the 5-second where we potentially would find reversals, and a lot of areas where we're probably going to get caught out, because we know that in the higher time frame scheme of things, if we are going to accumulate, we're going to try and manipulate both sides of the market out. So I'm definitely going to let price just play for a while and try to avoid being manipulated myself. I had a 1 pip stop loss and a 10 pip take profit, and that is 10 RR returns straight away. That is why this strategy or scalping is so useful, because we can have a 10 pip move in the market, which can happen within minutes, and we can profit massively from that. So let's just see how price reacts. We see that we tapped into supply, we've moved lower now. Although I would like to see price reverse here, we can see that we have been trading down with a lot of supply, which may be slightly concerning for us because price is either going to blow through the zone, or we're going to have a prolonged period of Wyckoff and liquidity building in order to absorb the supply that is currently dominant in the market. We'll just have to see what happens. The fact that price has entered the zone with such high supply is fairly worrying, but at this point patience is going to be our virtue. Whilst we wait for this, I'm instead going to go over to a different market just to take a look. I believe I was looking at Bitcoin earlier. Yeah, we didn't get a tap on this, and price has literally just fallen down with high volume, displacing a higher time frame low as well. Let's just zoom out slightly. Yeah, I mean, if anybody managed to get involved on the initial tap, then the profits would be insane here. We're already approaching the take or the take profit, the final target. So we wouldn't actually look to try and enter now, because if you remember the rule I was saying, ideally we want to look to take trades from the upper 50% of that movement. So anywhere inside this grey box. So if price was to retrace all the way back up and we could get involved here, then so be it. But try to refrain from entering in this lower 50%. It's not life or death. It's not a huge difference, but it's just a vague rule of thumb that we can follow. The fact that we are moving with such high volatility, however, does mean that the dollar seems to be strengthening. At which point this could invalidate the trade we're looking at here, because if the dollar strengthens, this market will drop. And if we look across the board, we have seen the same on a lot of markets. We can see the dollar is definitely strengthening. So this seems that fundamentally we do probably need to be careful, just because fundamentals are starting to take play. If we actually now go over to the fundamental calendar, just take a quick look, it doesn't seem like anything has come out recently or is to come out. We had unemployment claims, I believe, at 1:30, so 1:30 PM for us, which was worse than expected, so was worse for the dollar. So nothing on the actual calendar that I can tell that would be causing such effects. However, there are always things that can happen in the world that aren't on fundamental calendars that will still have an impact on the markets. So just take a look back over at this. We're not seeing much rejection from the zone. We have wicked, but as I say, if I was wanting to go long from here, I'd probably want to see a lot of structure play out first. For example, let's say we undergo an accumulation and we have something like this, and yes, we've already had the displacement, but I'd want to see a couple legs of this bullishness play out first, and then potentially start looking for buys from a demand zone like so, then take us higher. I'd want to see a lot of structure confirmed, because the further we go, the more confirmation we have. However, the further we go, the harder it can be to get a good entry. But one important tool that I suggest everybody learns, and this isn't just smart money concepts. I know a lot of people that trade technically as well also have this idea, but just explain it in a different light. So you've got the supply and demand balance in the market. So as I was saying, I'm looking for rejection from this zone. I was also expressing my concerns at the fact that we've entered the zone with a lot of supply. If you remember correctly, I said that it's very nice to see liquidity get built around the region of a point of interest. So if we were to potentially actually just see price sort of hesitate in this region first and then finally get our tap on the spring of an accumulation, that would be a lot nicer to see. However, that has not happened. So if we analyze the supply and demand balance, it does give me some slight doubts that this zone may not hold. Now, as I was saying, we can reference that to technical trading, because that is where we talk about the bulls and the bears. Are the bulls winning? Are the bears winning? That is just another light that we can look at the supply and demand balance at. It seems as if price is ready to disregard this zone, in which case we are likely free to run bearish when the charts load for us. Bear with us. It seems like there is no other downside target around this region that price may want to visit. As a result, it's probably going to see all of this as liquidity and target points to take out. So we can probably see price now trade down, clear all of that liquidity, and manipulate a lot of people at the market. So we can go back to the drawing board, and what I mean by that is that we can now look back again for sell entries. However, when the market is in such conditions like this, where we're having such heavy push downs, retracements, we may decide to either stray away from looking to trade the market, or if we do try, it's going to be very difficult because there just isn't enough opportunities. We're getting in on reversals, and if retracements aren't happening, it isn't giving us the opportunity to get in on reversals. Great stream again, James. Learned so much from the session yesterday. I appreciate that a lot. That is a point of these sessions, really, is obviously you get to watch me analyze and potentially trade the markets live, but then on top of that, hoping to just provide a lot of information and insights into how I actually look to view the markets and how I am profitable with the strategy that I use. So, as I stated, it's all about analysing the supply and demand balance as we enter a point of interest, and the way that we have structure and price action as we enter is a huge learning point for us to understand the likelihood of that zone holding. So I already expressed my concerns as soon as price started to enter the point of interest, that it did so in a fashion that I didn't actually like. So I'm not surprised that the zone didn't hold. I think from here, if we had to try and look for potential trading opportunities, I would be doing so by identifying this buy to sell candle, because if we were to use a 3-box strategy, we're saying that this is an impulsive wave down. So following fractal structure, we're following this as an impulsive wave. We're saying that this high is currently protected within the structure we're currently viewing, and for us to continue said structure, we want a reaction from that, or we may be reacting from, if you see the 2 wicks, we would have had a buy to sell in this region. Isn't identifiable on the time frame we're on then, but is identifiable here. So if we break this low, we know that price has actually reacted to this. If we have reacted to this, it's a good sign that there is still so much supply in the market, because we're literally unable to retrace that far. So it should provide us with a nice insight on what price does next. Very insightful. I appreciate that a lot. If you have any questions about the analysis, about me, about Forex in general, about LAGFX, make sure to send them through, and I'm more than happy to answer. I hope the audio is okay for everybody. The music to the volume of the mic. So it seems like price has the desire to now want to start running bullish, whether that be for the purpose of mitigating this zone or giving us a mitigation higher up, which we'll look for. If this is broken, we'll then start looking for points of interest higher. Although I'm not currently too concerned about that. We'll just see what happens. It could still be although I doubt it, it could still be a mitigation of this region. We still sort of are holding at this point. This is a very refined region of it. Although we haven't been delivered any displacements for us to assume price is reversing from here, nor is there enough supply in the market for me to like the idea of price reversing here. Yeah, so just as expected, given the way it was trading around this zone, we have invalidated it. We'll see what price does as we trade close to this zone. How have you found the market this week? Audio is perfect. The markets have been a very strange environment. Definitely a different phase to be getting used to. A lot of volatility I believe that the dollar is strengthening quite a lot against a lot of currencies. We see the dollar yen has been heavily bullish for some time now. We see the pound to the dollar and the euro to the dollar have been falling quite massively. So finding opportunities is slightly harder when we're in phases like that. But it's just adjusting to that phase strategy, which I believe I am starting to understand this market phase a bit better now. Audio is perfect. Lovely stuff, lovely. Thank you everyone for the likes as well. 12 likes now on this live stream, this video. So we appreciate everyone that clicks that. It just helps us get out there, and it helps us know whether you are enjoying the content that is being put out. So I'm kind of liking this. We are building some liquidity. Ideally, I'd want to see price tap, have a displacement, and then we can look to enter if that is what happens. But we can see already getting a slight bit of rejection from the zone. Okay, this is not promising at all. Yeah, so we've blown through, although we weren't even delivered anything that made me even want to sell from that region. So now we've done this, it's more than likely going to be the case that we're going to look for some higher time frame points of interest. So if we look at this zone, a point that I like is this region right here, where we've had some consolidation, some institutional control, and then straight afterwards this heavy push down. So if we go to 15 second, let's just look inside of here now. I like the idea. There's two ways we could tackle this. I like the idea because we know that this is institutional control in this region, because in order to follow this bearishness we should have protected that high, but instead we had a very high volume buy candle which came to mitigate the position we were watching before. So I do quite like the idea of us taking this as the point of mitigation, because this is an institutional footprint which we haven't had any structure hold within or mitigate. We obviously had this tiny wick that came into it, but potentially not a full mitigation. However, I did also like the idea because this is the last buy to sell before our heavy drop off, before our inefficiencies were created. So both zones to me are valid. Again, we just have to watch the price action as price trades into them. We could, given our bias of the fact that we want price to go higher, we could start looking for buys, but because of how unconfirmed this market is at the moment, I think that would be rather risky to do. So what we'll do is we'll set an alert firstly at this lower zone, so 1.0527 alert. And what we can look to do here is just do a bit of analysis on a different market as price does its thing. So as I was stating with the dollar yen, the fashion that it has been trading in, so if we just start on the 15-minute for example, we can actually see that price perfectly came to mitigate the demand zone that I was watching. I wonder what time this was. This was yesterday later on, so after I'd finished my trading session around, is that about 6:30 p.m? Yeah, so I'm not usually watching the markets at that time. But obviously we've had impulse, retrace, impulse, retrace. This is our next impulse, so we are expecting price to exceed the final target here. It seems to have a lot of demand currently in the market, so I don't think we'll have a wider scheme retracement before exceeding the final target, and that wider scheme retracement would be a perfect opportunity for buy positions. However, it doesn't seem like they will be delivered. Now we have the assumption that price is going to trade there. We could instead go down to lower time frames and just see if any entry opportunities were delivered. So let's replay all the way back after we were delivered this displacement, because that is when we know that the reversal is potentially confirmed. Let's just speed that up a bit. So when do we get the displacement? We've got the displacement. So we have, in my eyes, impulse, retrace, impulse, I'd potentially be looking somewhere in this region. It could be refined to that last candle. Potentially see a tap and continuation from this. We tap in. And obviously we're replaying very quickly, but just for example, we trade in, we displace. Now we could either A, get involved as soon as we see the displacement, or B, I probably would have looked for a mitigation of somewhere in this region, which we didn't get delivered. So if we were waiting for the mitigation, we probably wouldn't have been able to find the entry. However, we have had that displacement, so that we could have, for example, got involved as soon as we saw displacement. Stop loss here. We would look to partial at this high, but then also have a take profit at the final target, which we already know is much higher up. Let's find where it is. All the way up to here. Charts are a bit laggy for me. So let's see if this position would have held, if we would have been taken out, if we would have got a partial. Let's see how it plays. Okay, so we continue trading up. Not yet had the partial. Potential stop loss hit incoming. No. We have the partial. Now, it's quite funny actually, I was saying it doesn't seem as if we're going to get this mitigation. However, had we waited for that mitigation, had we taken the last sell candle, we would have actually had, it's a very slight tap, but a tap nonetheless, because the way I'm looking here is we could have had a pending order. Sit on the retest now. If you're not too greedy, you could have waited for that. That would have played out. That would have happened. However, as I said, I was potentially a bit greedier with the entry and would have looked to place that buy position after the displacement. So regardless, we are still running. We've just had a partial now to secure some profits, and then let's see how price plays from here. I'm just curious to see if price ever comes to break this stop as it trades. Let's go to 1 minute, it'll just play price out quicker. Okay, although we are potentially looking at a mitigation in this region, so if price does trade down, that is one thing we're watching. An unrefined zone would tell us that we're looking somewhere in this last buy to sell. We could refine that, but I'm not actually looking for an entry, just saying that we could see a retracement back down into that region. Okay, so it's still playing out, still holding us in profit. We are getting some rejection, so we could need a wider scheme correctional wave, which appears to be happening. Let's see if we mitigate this region. Maybe we do, maybe we don't. We've already tapped into this last buy to sell, yeah, which seems to be the zone. Still playing out. Now let's go to 3 minute, just so we play out quicker, and we'll take price back to where we are currently. There we go. So you see, I've walked you through that entry. What we had is, after tapping into the zone, we had the displacement of this high. Straight after that, we took a demand zone which got tapped. Now we could have either entered on the displacement, like we were saying, the displacement down there, sorry, or we could have waited for the tap into that, which we did get delivered. Either way, we would have had an entry somewhere in this region. If we got in on this tap, we would have had a much more refined entry, but nonetheless, this trade would currently be running at a 16 to 1 with an overall take at this point at around 30 to 1. We could have potentially looked to partial at this region, just because it's also in the higher time frame scheme of things. We've had impulse retrace to this level, and then another impulse down. So this is arguably the protected high in the higher time frame scheme of things. So we could look to partial again here. So maybe 50% partial there, another 50%, which is 25% of the original position, and then 25% remaining for the 30 RR return. So if we just add this up, let's figure out how much profit we potentially would have been in so far. So from entry to there, we're looking at 12 pips. with a stop loss of 6. That's 2 RR, so we would have taken off 1 RR here. We took off half the position, and then at this level, if we work this out, we're taking off a quarter of the original position at, let's just say, 17 RR. So that is going to be 4.25 plus 4.25 RR. And then if the take profit was to get hit, that's a quarter of 30, so that's 7.5. So in total, we're looking at 11.75, 12.75 our total if take profit was to be hit, which means that we could lose 12 trades after this, or trying to be involved in more movements, and still end up being profitable overall, because we've had this one winner. Now this is why we can afford to be aggressive with the strategy, because when we do get that correct entry, and when market conditions and phases are correct, and it plays out, we can literally make up for an entire week of losses. Now, I did say that we would look to stream for about 45 minutes. We're now about 46 minutes in, although we did spend 5 minutes on the intro whilst we waited for people to get involved. So I think we'll do another 5 minutes here and then look to wrap it up. If you have any questions, now is a great time to get them in. What we will do, however, is now go back over to the euro to the US. As we see, the price has not played out the way that we originally thought. Something that I just wouldn't be trading, because we've pretty much just tapped the high, created liquidity, so there's a lot of leftover liquidity in this region. When we've left liquidity like that, I'm not looking to enter sells against that liquidity, because my bias in the long term is going to be for price to reverse trade higher and clear said liquidity. So yeah, as stated, if anybody has any remaining questions before we look to wrap this up, then send them through. So just to add, they are 2 demand zones. I'm just going to leave on the market before we wrap up, that I'm thinking price could potentially react to, because in my eyes, this down here is a protected low. This is an impulse, retrace impulse. We've obviously displaced that, so we know this is an impulse. We know that this low should be protected. All of this comes to mitigate all positions in these regions. So the only 2 unmitigated positions I would like to see get mitigated from now are the 2 that you can see on screen. So we'll leave that with you. I'm actually going to put my alert up at the final target, just so I'm notified if this trade were to play out. This is exactly what you can do. This tap happened obviously at 6 in the morning, so getting involved at that time isn't always going to be easy, but you know, an entry I'm seeing right off the bat is a very nice sell to buy. We had the tap from that region, so there's just so many opportunities that we have that we can look to take advantage of, and for me it's easy enough to spot, because all that simply is it's a heavy sell before buy, with no price action coming back down, with some market inefficiency paired with it. Another region right off the bat is this sell that we've seen, price a heavy reversal, no structure to come back and hold inside, and then some market inefficiency again, and this was a very good potential entry because we've seen a perfect accumulation. So as long as you spend time learning, you spend time practicing, you will get to a point where you can also just spot things that way. What are my personal favourite charts to trade? Honestly, the euro to US dollar, the US dollar to the Japanese yen, the Australian dollar to the US dollar. Them three are my major markets that I prefer to trade. I just feel like they have the most volatility and give me the best opportunities. Euro USD is definitely much harder to trade. I'd say when it's in its best conditions, dollar yen has given me the best opportunities in my trading career. I do like to every now and then look at oil and Bitcoin, but that is fairly rare. Regardless, I think that wraps us up for today. I think that was a very nice stream. I think we had the opportunity there to learn a lot, and I've left you with two zones that I'm looking at, whether they hold, whether they don't. But given how aggressive price is currently trading, it wouldn't surprise me if we do tap and continue higher with those. So yeah, as stated, this whole region, potential for 12.75 RR returns after 1, 2 partials, and 25% of the position running for take profit. Some people may have chose to manage that trade differently risk wise and just held, in which case you're getting 30 RR returns, in which case you can afford to have 29 wrong trades and still be profitable. But yeah, it doesn't seem like there's any other questions remaining, so we'll wrap this up. I hope everybody enjoyed watching the live markets get traded today. We're definitely looking at doing more of these sessions, just so we can give you all insights into how we view and tackle markets. I'm just going to leave you on the screen for a couple of minutes, just so we can see if price does react from these. And I'm going to just turn the music louder, and we can spend a few minutes just chilling out and seeing if price does react to these. So thank you everybody who tuned in and watched. All the likes that we got, appreciate the feedback and everything. And we will see you next time we're here for a live session.